Hello, welcome to the Boston Private Income Fund quarterly report for the period ended 30 June 2019. My name is Paul Jones and I am the fund manager of the Boston Private Income Fund. The Boston Private Income Fund is reporting a quarterly return of 1.863% for the June 2019 quarter, equivalent to an annualised return of 7.473% and exceeding the Boston Private Income Fund's targeted return for the June 2019 quarter. Think Tank Group Proprietary Limited, the non-bank commercial mortgage lender that forms the basis of the Boston Private Income Fund's investment strategy, has again produced another strong performance over the recently completed quarter. As at 30 June 2019, Think Tank recorded total loans under management of $1.08 billion across 1,638 loan accounts. In comparative terms, the dollar value of loans under management has grown in the 12 months by $282 million, a 35.2% increase in the value of loans under management, whilst the quantum of loans under management has also shifted upwards by 436 loan accounts, a year-on-year growth rate of 36.3%. Deeper loan book metrics taken from the Think Tank commercial property loan portfolio at the end of the June 2019 quarter are as equally impressive. The weighted average loan-to-value ratio, or LVR, across the portfolio at the end of the June 2019 quarter is 62.58%. This represents a 68 basis point reduction on the same ratio reported in the June 2018 quarter, but at the same time is also a 6 basis point increase in the weighted average LVR reported in our March 2019 quarterly report. Investors should note that this levelling out in the weighted average LVR is not a sign of concern, but more of a manifestation of regulator policy around mortgage lending and a change that was fully anticipated. Boston Managed Investments is satisfied that Think Tank is focused on maintaining prime, bank quality credit at the core of its lending policy. Think Tank loan arrears of greater than 30 days have again continued to track closely in line with historical averages over the quarter. As at 30 June 2019, the quantum of loan accounts with repayment arrears of greater than 30 days, as a percentage of the loan book, is 0.95%. A closer analysis of the reported loan arrears over June 2019 quarter confirms that there are no onerous anticipated losses, nor any significant clusters amongst geographic or industry sectors. And Boston Managed Investments is convinced that loan arrears are being carefully, diligently, and responsibly managed by Think Tank. During the June 2019 quarter, the Australian market experienced its first change in the official cash rate since August 2016, when on 5 June 2019, the Reserve Bank of Australia Board announced its decision to cut the official cash rate by 25 basis points from 1.5 to 1.25%. Market participants and observers were not entirely surprised by the June 2019 rate cut, with many anticipating a move towards looser monetary policy given the persistent downward trending movements in the 30-day bank bill swap rate, or BBSW30. The 30-day bank bill swap rate, as at 30 June 2019, is 1.22%, which we note is down from a high of 2.04% only 6 months earlier, suggesting the possibility of more official rate cuts by the Reserve Bank Board. Indeed, on 3 July 2019, just prior to the production of this video report, the Reserve Bank of Australia announced that it had elected to reduce the cash rate by a further 25 basis points to a new historically low level of 1%. The 30-day bank bill swap rate figure, which is expected to continue to weaken for the remainder of 2019, has also driven down term deposits and other selected interest-based income products, some of which are now struggling to stay above the rate of annual inflation. Whilst the real annualised rate of return on the Boston Private Income Fund is above term deposit rates, the fund itself is also not immune to negative movements in the 30-day bank bill swap rate. The Boston Private Income Fund's June 2019 annualised return has fallen by 40 basis points in comparison to the previous March 2019 quarter. Boston Private Income Fund investors should however consider that this change does not reflect the full reduction in the bank bill swap rate, which itself has declined by 57 basis points over June 2019 quarter. Furthermore, the Boston Private Income Fund has maintained its margin over the bank bill swap rate and outperformed its targeted annualised return for the June 2019 quarter. If you have any questions about this video report or your current Boston Private Income Fund investment, please call me on 02 8920 8886. Thank you for watching another of our quarterly video presentations.